In 1992, the Soviet ruble collapsed in less than 8 months. 2,500% inflation, 40% GDP drop, 50% mortality increase. That's like waking up one morning and your $100,000 retirement account can now buy a used Toyota. Every currency collapse in history, Weimar, Germany, Zimbabwe, Venezuela, followed the exact same 5-stage pattern before total replacement. Everyone says the US dollar is safe because it's the world's reserve currency with no viable alternative. Too big to fail, backed by the largest economy and military. But America just completed stage 4 in October 2025. The dollar fell 11% in 6 months, the worst decline in 52 years. Foreign central banks dropped their dollar reserves to 56.3%, the lowest since 1994. The dollar is a star collapsing under its own gravity. The bigger it got, the more fuel it consumed. And now the supernova is coming. Here's exactly how this 5-stage pattern works and where we are right now. Think of a currency like a reputation. Once people stop trusting it, the collapse accelerates on its own. The US debt to GDP hit 124% in 2024. It's projected to reach 125.4% by the end of 2025. That's the highest peacetime level in American history. What that means is, we owe more than our entire economy produces in a year. It's like making $60,000 per year but owing $75,000 on your credit cards. Now here's the hidden part most people miss. Dollar reserves fell from 73% in 2000 to 56.3% in Q2 2025. That's a 17.7% drop in global dominance, and it's accelerating. In just the first half of 2025, the dollar index dropped 10.7%. That's the worst performance in over 50 years. Think of it like this: the dollar used to be the only credit card everyone wanted. Now people are applying for other cards and cutting theirs up. And here's the sneaky part nobody talks about. Money supply increased 40% between 2020 and 2022. That's $6 trillion printed in 2 years. More than was created in the previous 100 years combined. But here's the trick. China dumped over $300 billion in treasuries since 2021. Central banks increased gold reserves 42% since 2020. They're quietly building exit infrastructure while publicly supporting the dollar. It's like your friend saying everything is fine while secretly packing their bags to move out. So we're printing faster than ever. Our debt is at record highs. Foreign nations are dumping our bonds. And the dollar lost more value in 6 months of 2025 than any period since 1973. That's all 5 warning signs flashing red simultaneously. Now, you might think America is different, that we're too powerful for this to happen. But history says otherwise. Remember the Soviet Union? They looked invincible in 1985. Nuclear superpower, massive military, control over 15 republics. Weimar Germany was an industrial powerhouse. Zimbabwe was Africa's breadbasket economy. All 3 had one thing in common. They believed their currency status made them untouchable. So they started printing money to cover deficits. Soviet money supply exploded. Inflation hit 2,500% in 1992. GDP dropped 40%. Life expectancy fell by 5 years. Weimar printed to pay war debts. Prices doubled every 3.7 days by October 1923. Zimbabwe printed to fund government spending. Inflation hit 231 million% annually by 2008. Currency completely abandoned. Here's the lesson. It doesn't matter how powerful you are or how dominant your currency is. The moment you start using the printing press to solve debt problems, you enter stage 1 of the 5-stage collapse pattern. And once you're in, there's no way to stop the progression without massive pain. So what does stage 5 actually look like? Walk through it with me. Say America hits stage 5. Complete loss of confidence, where foreign nations dump all treasury holdings simultaneously and refuse to accept dollars for oil, goods, or commodities. First thing that happens is Treasury auction failures. The US government tries to sell bonds to fund operations, but China, Japan, Saudi Arabia, and Europe don't show up. Without buyers, bond prices collapse. Yields spike to 15 to 20%. When that happens, it's like your credit card interest rate jumping from 5% to 20% overnight. Suddenly the government can't afford to pay interest on existing $35 trillion in debt, let alone fund new spending. The Fed panics and starts buying every treasury to prevent government shutdown, printing $5 to $10 trillion in months. Your grocery bill that was $500 per month jumps to $900, then $1,500, then $3,000 within a year. Gas prices hit $12 to $15 per gallon because oil is denominated in dollars, and OPEC demands payment in yuan, euros, or gold instead. That's like your commute to work costing $80 to $100 per day just to get to your job. Regular people notice their bank accounts losing value in real time. Your $50,000 in savings that could buy a used car today can only buy a laptop 6 months later. Then just a tank of gas another 6 months after that. Government tries to fix it with capital controls, limiting bank withdrawals to $500 per week, freezing foreign currency purchases, banning gold exports. They impose price controls on food and gas, but shelves go empty because producers refuse to sell at artificial prices. Final outcome is currency abandoned within 18 to 36 months. Dollar replaced by basket system. BRICS currency for commodities. Regional currencies for trade. Gold for store of value. American purchasing power drops 40 to 50% permanently. GDP contracts 30 to 40% over 2 to 3 years. Unemployment hits 25 to 30%. That's the nightmare everyone worries about. Stage 5, total collapse and replacement. But here's where it gets interesting. This nightmare scenario, it can't actually happen the way people imagine. The moment foreign nations try to dump all their dollars, they destroy themselves first. China holds over $3 trillion in dollar-denominated assets, $1 trillion in treasuries, $800 billion in U.S. corporate bonds, $500 billion in U.S. real estate and equities. If they dump those assets, they lose $1 to $1.5 trillion in value overnight as prices collapse. That's equal to 15 to 20% of China's entire GDP evaporating. It's like burning down your own house to spite your neighbor. Japan holds $1.1 trillion in U.S. treasuries. If they sell rapidly, bond prices crater. Their remaining holdings lose 30 to 40% value. Plus, the yen would skyrocket, destroying their export economy that depends on weak yen. Sony, Toyota, Honda all become uncompetitive globally. Their workers lose jobs by the millions. Saudi Arabia and Gulf states have tied their currencies to the dollar since 1980. If they break the peg and dump dollars, their entire financial system collapses. Every mortgage, every business loan, every pension denominated in rials suddenly worth 50 to 60% less. Europe holds $19 trillion in dollar assets through banks, pension funds, and corporate holdings. A disorderly dollar collapse triggers European bank failures because their assets become worthless, while their euro liabilities remain. That's 2008 financial crisis multiplied by 5. Here's the math. $7 trillion in foreign-held treasuries. If those lose 30% of their value in a rapid dump, that's $2.1 trillion in losses, plus $6 trillion in corporate bonds losing 40% value. That's $2.4 trillion more, plus $12 trillion in equity holdings losing 50%, $6 trillion gone. Total loss right away is $10.5 trillion to foreign holders. That's more than the entire GDP of Germany and France combined, evaporating in months. So foreign nations can't dump dollars without destroying trillions in their own wealth. America can't keep printing without accelerating the loss of confidence. Both are stuck in a mutual destruction trap where any aggressive move triggers catastrophe for both sides. If you're starting to see how this mutual trap is creating a slow-motion collapse instead of a sudden crash, hit that subscribe button right now. I'm breaking down the economic forces that mainstream media won't explain to you. New videos every week showing you exactly how to protect yourself before stage 5 hits. Click subscribe and turn on notifications. Now, both sides know they're trapped. So, what are they actually doing about it? Two strategies are playing out right now. First strategy is the BRICS payment system and de-dollarization infrastructure. Russia, China, India, Brazil, South Africa building alternative payment rails that bypass SWIFT and settle in local currencies or gold. Progress so far? From 0% of China-Russia trade in yuan in 2015 to 95% in 2025, Saudi Arabia signed yuan for oil deals with China worth hundreds of billions. India and Russia trading in rubles. But here's the problem. System only handles 20 to 30% of their total international trade. They still need dollars for most global transactions. Building alternative to 75 years of dollar infrastructure takes decades. Second strategy is central bank gold accumulation. China, Russia, India, Turkey, Poland, buying physical gold at record pace. Central banks added over 1,000 tons of gold in 2024 alone, 42% increase in reserves since 2020. Problem is, even at record buying pace, gold only represents 10 to 15% of their total reserves. Would take 20 to 30 years to fully replace dollar reserves at current accumulation rates. So here's where we are. Started in 2020, when COVID money printing triggered stage 1. 6 trillion created in 2 years. Where they are now? 30 to 35% de-dollarization in commodity trade, 15% in reserve holdings, 10% in cross-border payments. Moving from stage 3 into stage 4 throughout 2025. And the crisis is accelerating. U.S. debt climbing 1 trillion every 90 to 100 days. Dollar dropped 11% in first 6 months of 2025. Worst in 52 years. Foreign treasury holdings at lowest percentage since 1994. So foreign nations probably have 3 to 7 years before they have to make a big choice. Either commit fully to alternative system and abandon dollar, triggering stage 5 collapse, or accept slower, controlled devaluation where dollar becomes regional currency but not global reserve. And it's not just foreign nations that are stuck. America is trapped too. Can't stop printing without triggering massive recession. 35 trillion in debt requires 1 trillion per year just in interest payments. Stop printing. You get government shutdown and 20 to 25% unemployment. Both sides stuck because the dollar isn't just America's currency. It's the global financial system's foundation. Pulling one brick brings down the entire structure on everyone's heads. Here's what makes this situation so bizarre. For 75 years since Bretton Woods in 1944, this arrangement worked beautifully for both sides. America got infinite deficit spending, cheap imports, massive living standards. Foreign nations got access to American consumer market, safe assets to park reserves, stable trade currency that everyone accepted. The good thing created the trap. The more America spent, the more dollars accumulated abroad. The more foreign nations held dollars, the more dependent they became. Perfect feedback loop that spiraled into mutual addiction. Now those benefits turned into problems. America's spending became unsustainable debt. Foreign reserves became depreciating assets. And the stable system became a ticking time bomb. So what happens next? 3 possible scenarios over the next 3 to 7 years. Scenario 1. Controlled international reset. 15% chance. G20 nations coordinate new agreement where dollar devalues 30 to 40% but remains partial reserve currency alongside yuan, euro, and gold. U.S. standard of living drops 20 to 25%, but system remains functional. Scenario 2. Disorderly regional fragmentation. 60% chance. Dollar loses global reserve status over 3 to 7 years as separate payment systems emerge. Dollar becomes regional currency for Americas. Loses 50 to 60% of international purchasing power. U.S. standard of living drops 30 to 35%. Unemployment hits 12 to 15%. but government remains functional and domestic economy stabilizes at lower level. Scenario 3. Rapid confidence collapse Soviet style. 25% chance. Triggering event causes panic dollar dump. Fed prints 10 to 20 trillion in emergency response. Inflation hits triple digits within 18 months. Capital controls imposed. Dollar replaced entirely. 40 to 50% GDP contraction over 2 to 3 years. Decade-long depression. Most likely? Scenario 2. The slow, painful decline. Because both sides are terrified of Scenario 3, so they'll manage the descent as carefully as possible. But that still means massive wealth destruction for anyone holding pure dollar assets. So what does this mean for you? If Scenario 2 happens, here's your reality. Bonds and long-term fixed income. If dollar loses 40 to 50% purchasing power, your 30-year treasury paying 3% means you're actually losing 37 to 47% in real terms. Cash savings get destroyed. 100,000 in savings loses 40 to 50,000 in purchasing power. Stocks and real estate in domestic terms might hold value, but your international purchasing power collapses. Here's how you protect yourself. Physical gold and silver bullion, not ETFs or paper gold. Central banks added 1,000 plus tons in 2024. Gold hit all-time highs in 2025, while dollar collapsed. 10 to 20% of investable assets here. Foreign currency denominated assets and offshore real estate. Swiss francs, Singapore dollars, Norwegian kroner held value while dollar dropped 11% in 6 months. 20 to 30% of investable assets. Bitcoin and decentralized cryptocurrency. Venezuelans, Argentinians, and Turks used crypto to escape currency collapse. Bitcoin up, while dollar down throughout 2025. 5 to 15% of investable assets. Avoid long-term fixed-rate bonds. Single currency exposure. Assets that can't be moved quickly. Rebalance your portfolio within the next 6 to 12 months. Stage 4 can last 1 to 3 years, but once it shifts to Stage 5, the window closes in weeks, and capital controls prevent movement. If this changed how you see the dollar's future, if you understand why we're trapped at Stage 4 with Stage 5 approaching, then you need to protect yourself before the majority realizes what's happening. Subscribe to this channel right now because I'm tracking every Stage 4 indicator. Treasury auction results, foreign reserve data, BRICS payment system progress. Next video drops in 3 days, and we're covering the protective asset framework in detail. Don't wait until capital controls trap your wealth inside a collapsing currency. Hit subscribe, smash that notification bell, and I'll see you in the next one where we talk about the 3 asset protection strategy that worked in every historical currency collapse.